The silver price didn't crash. Samsung just flipped the board, and silver stopped being precious the moment it became strategic. What happened in South Korea this week barely made headlines, but it quietly rewrote the rules of energy, cars, and the global silver market. And Wall Street didn't see it coming. For 30 years, we've been stuck with the same problem, even though the devices kept getting better. Lithium-ion batteries run everything: phones, laptops, electric vehicles. But they all share the same hidden flaw. Dendrites, tiny needle-like lithium structures, form when batteries charge too fast or age too long. They grow silently, punch through separators, and that's when fires happen. This is why EVs still take forever to charge. It's why the winter kills range. It's why battery recalls keep happening. Engineers have known the problem forever. They just couldn't stop it. And that's why solid-state batteries have been the holy grail. No liquid electrolyte, no fire risk, faster charging, higher energy density. On paper, they solve everything. In reality, every major automaker failed to make them stable at scale. Until now. Samsung's new solid-state battery doesn't rely on a miracle chemistry or some exotic new element. It uses a silver-carbon composite layer on the anode. And here's the key point. It doesn't block lithium. It controls it. The silver acts like a host, evenly distributing lithium ions so they can't spike and form dendrites. That's the breakthrough. Not marketing, not hype. Chemistry. This isn't theoretical either. The science is published. Pilot production lines are already running. Automakers are already testing early units. That's why people are talking about 900-mile range and 9-minute charging times. Those numbers sound insane because until now, they were impossible. But here's the part almost nobody is saying out loud. This battery doesn't use trace silver. It doesn't sprinkle a little into circuitry. The silver is structural. It's part of the battery's DNA. And to make it work, you need grams of silver per cell, not micrograms. And once you hear that, everything changes. You might be thinking, okay, so they use a little silver. So what? Let's put real numbers on this, because this is where the story stops being interesting and starts being dangerous. A traditional gas car uses around 15 to 20 grams of silver. It's in the window defroster, the seat motors, the control modules, small amounts scattered across dozens of components. An electric vehicle already uses more, roughly 30 to 50 grams, spread across electronics, inverters, and power systems. That demand alone has been pushing the silver market into deficit for years. Now enter Samsung's new battery technology. According to published estimates, Samsung's solid-state battery design can use roughly 5 grams of silver per battery cell. That might not sound like much until you realize a single EV battery pack contains hundreds of cells. Scale that up to a standard 100 kilowatt-hour battery pack, the kind you'd find in a mid-range electric sedan, and you're looking at about 1 kilogram of silver per vehicle. That's not a typo. 1,000 grams. More than 2 pounds of silver in a single car. Let's be conservative. Assume Samsung and others manage to trim the design down, so the Samsung solid-state battery only adds 50 grams of silver per car. Even at that level, you've still doubled silver usage per EV overnight compared to current models. Now look at production. Roughly 90 million cars are made each year globally. If just 20% adopt solid-state batteries by 2028, a realistic target given Samsung's timeline, that's around 16,000 metric tons of new silver demand annually. That's about 115 million ounces. Push adoption to 80% as governments push EV mandates harder, and demand jumps to 64,000 metric tons. At that scale, you're talking about silver consumption that rivals entire national economies. For context, the total global silver mine supply sits at about 830 million ounces per year. This one technology, just Samsung EV battery production alone, could consume 25 to 35% of all silver mined on Earth, and that's before solar panels, which already eat up 600 million ounces. Before electronics, before medical devices, before jewelry, before the investment demand from people trying to protect their wealth. So ask yourself, what's left? Nothing. There is no excess silver sitting around waiting for this transition. The market is already running a structural deficit of over 1 billion ounces. This isn't an additive demand that gets absorbed smoothly over time. This is a collision between an immovable geological reality and an accelerating industrial need. The Samsung solid-state battery silver requirement isn't a variable. It's chemistry. You can't negotiate with the periodic table. And that's when people usually say, okay, but they'll just recycle it. But wait, this is where the story breaks again. Recycling sounds comforting. It feels like a solution. But for silver, it's mostly a myth. Gold gets recycled at nearly 90%. Silver doesn't even come close. Less than 20% of silver ever makes it back into the supply chain. The reason is simple: dispersion. Silver is used like dust. There are 0.1 grams in a phone, maybe half a gram in a laptop, thin films in solar panels, microscopic layers in chips. It costs more energy and money to extract that silver than the silver itself is worth, so it gets buried in landfills. Solid-state batteries do use more silver, which sounds like good news for recycling, until you think about time. The EV battery isn't recycled next year. It's recycled in 15 or 20 years. That means every ounce of silver going into a 2026 solid-state car is locked away until the 2040s, completely removed from circulation during the exact decade when demand is exploding. So the recycling wave everyone is counting on doesn't arrive in time. It misses the crisis entirely. That's why this shortage isn't cyclical. It's structural. The consumption destroys availability, and the sequestration lasts a generation. So if recycling is a fantasy, the next question is obvious. Can we just mine more? This is the part most people never factor in because it sounds boring until it isn't. You can't print a silver mine. You can't spin one up like a factory. From discovery to production, a new silver mine takes 10 to 15 years if everything goes right. Permits, feasibility studies, financing, infrastructure. It's a slow, brutal process. And here's the problem. Samsung needs silver now. Tesla needs it now. Battery factories are being built today, not in 2035. The timeline for supply simply doesn't match the timeline for demand. Even worse, the mines we already have are wearing out. Back in 2005, a solid silver mine produced about 15 ounces per ton of rock. Today, a good mine produces closer to 4 ounces per ton. That's a collapse in ore grade. To get the same amount of silver, miners now have to dig up almost 4 times as much rock. That means more diesel is burned, more water is consumed, more labor, more waste, and a much higher cost per ounce. So even when the silver price goes up, supply doesn't respond the way people expect. The easy silver is gone. Now layer politics on top of geology. Mexico produces roughly 25% of the world's silver, and it has effectively stopped issuing new open-pit mining permits. Peru, another major producer, is constantly hit by labor strikes and social unrest. Russia is sanctioned and largely removed from Western supply chains. And environmental opposition to mining is growing everywhere. So at the exact moment demand is accelerating, supply is not just constrained, it's actively shrinking. This is a pincer movement. Demand is exploding from EVs, solar, and electronics. Supply is collapsing due to geology, politics, and underinvestment. And the inventory buffer that used to absorb shocks, it's gone. Vaults are thin, registered stockpiles are depleted. There's no hidden stash waiting to come online, which means there is only one valve left that can move: the silver price. That's it. No innovation fixes this. No policy shortcut solves it. When physical supply can't expand and demand is non-negotiable, price is the only mechanism that restores balance. And this is where the story stops being about markets and starts being about power. And here's where governments get involved. Governments around the world have mandated the end of the combustion engine. Deadlines are written into law. Automakers are legally forced to transition to electric vehicles, and billions are being poured into battery factories to make it happen. But here's the mistake no one wants to admit. They forgot to check the periodic table. If the silver price pushes toward $200 an ounce, the cost of a solid-state battery explodes. Suddenly, you're adding thousands of dollars in raw material cost to every vehicle. Margins disappear. EVs become unaffordable for average buyers. And the transition stalls. But governments can't let it stall. They've built climate policy, industrial strategy, and political credibility around net zero targets. Walking it back isn't an option. So when the market fails to deliver affordable silver, governments don't step aside. They step in. That's when silver stops trading like a commodity and starts behaving like oil during wartime. Subsidies come first, then allocation, then control. Under laws like the Defense Production Act, governments can declare materials critical to national security. Once that happens, industrial users get priority. Retail buyers don't. That's how you end up with scenarios people think are impossible. Restrictions on bullion sales, limits on coin minting, a quiet diversion of supply away from investors and into battery factories. And this isn't theoretical. Samsung isn't just another corporation. It's the backbone of South Korea's economy. When Samsung needs silver to keep factories running, the government will move mountains to make sure it gets it. The same logic applies elsewhere. National champions don't lose supply battles. National security always trumps the free market. So when people ask whether the silver market can handle solid-state batteries, they're asking the wrong question. The real question is who gets the silver when there isn't enough to go around? Because once silver becomes essential to transportation and energy infrastructure, it's no longer optional. It's no longer decorative. It becomes strategic. And when that happens, the rules change for everyone. So how does the average person survive this? This is the moment where the story stops being theoretical and starts leaving paper trails. Samsung isn't just publishing research papers and running lab tests. They're already locking in silver supply in the real world. A clear example is their partnership with Silverstorm Mining, a TSXV-listed miner restarting the La Parrilla silver mine in Durango, Mexico. Samsung-backed subsidiaries provided $7 million in offtake prepayment financing to bring that mine back online. That money isn't for exploration hype or future potential. It's for mill rehabilitation, underground development, and working capital. Basically getting silver out of the ground and into the supply chain as fast as possible. And here's the key detail most people missed. In exchange, Samsung secured the right to purchase 100% of the lead silver concentrate and zinc concentrate produced at La Parrilla for 2 years. Not some of it, all of it. The La Parrilla complex includes a 2,000-ton-per-day mill and multiple underground mines. This isn't a hobby project, it's a serious industrial operation, and Samsung is positioning itself at the front of the line before mass production of its new battery technology ramps up. That matters because companies don't prepay for offtake unless supply risk is already visible. This isn't speculation, it's a procurement strategy. Samsung is treating silver the same way oil refiners lock in crude or chip makers secure semiconductor-grade silicon. And this won't stop with one deal. Once one major battery manufacturer starts pre-buying silver, the rest are forced to follow. Toyota, Volkswagen, Tesla, none of them can afford to discover too late that silver supply is spoken for. When battery factories cost billions, running out of a key material is an existential risk. This is how floor prices get set, not by retail buyers, not by charts, by industrial players who need the metal regardless of price. The procurement contracts are real. The timeline is real. So what's fake? Friday's silver price dropped to $61.96 looked dramatic if you were watching the screen. And that was the point. Banks smashed the paper price through heavy selling of futures contracts, hoping to shake out retail holders and reset sentiment. Algorithms dumped paper silver in New York, while headlines talked about bubbles and pullbacks. But here's what happened at the same time. Samsung was locking in physical silver, long-term, off-market, no leverage, no stop losses. This is the difference between paper and physics. Banks play short-term games with contracts that never settle. Samsung is playing a long-term resource game where metal has to exist, be delivered, and be used. Physics doesn't care about sentiment. Physics always wins. And the physical market is already telling you the paper price is lying. On the Shanghai Gold Exchange, where most trading involves actual delivery, silver has been trading closer to $66 or $67. That's a massive premium over COMEX pricing. It creates an arbitrage gap so obvious it can't last. When Asian markets open, traders buy cheap paper silver in the West and sell it into higher-priced physical markets in Asia. That buying pressure forces prices back up. This mechanism has crushed suppression attempts before, and it's still there. So that Friday drop wasn't a signal of weakness, it was a window. It was likely the last moment silver traded under conditions where the auto industry hasn't fully repriced what Samsung's solid-state battery means for supply. Once procurement departments everywhere run the math, they won't be buying at $61.50, and the market is finally waking up to this. Even before Samsung entered the conversation, silver was already in trouble. The global market has been running a deficit of roughly 1.1 billion ounces over recent years. Solar panels alone consume around 600 million ounces annually, and that number keeps climbing as renewables expand. Electronics, medical equipment, jewelry, and investment demand are all competing for what's left. The buffer is gone. Inventories are thin. Registered stockpiles at major exchanges have been quietly draining for years. Now layer the Samsung solid-state battery on top of that. This isn't incremental demand that gets absorbed gradually. It's a structural shift. Silver is moving from being a supporting industrial material, a nice-to-have additive, to becoming a core input in energy storage and transportation. That's a completely different demand profile, and it comes with completely different price dynamics. What makes this moment unique is that two massive industries are pivoting at the same time: energy and transportation. Both are leaning into technologies that require silver at scale. Both are colliding with a supply chain that's been starved of capital and exploration for more than a decade. No plan B is waiting in the wings. We've seen this movie before, and it doesn't end well for latecomers. In the early 2000s, automakers quietly shifted catalytic converters toward palladium to meet stricter emission standards. Analysts ignored it. Investors assumed platinum would stay dominant. Supply tightened faster than anyone expected. Palladium went from roughly $200 an ounce in 2001 to nearly $3,000 by 2022. By the time Wall Street woke up and started covering the story, the price had already done a 10 times move. Then there's cobalt. Electric vehicle hype in 2017 pushed cobalt from $30,000 per ton to over $90,000 in less than 2 years. Same setup: new tech, limited supply, delayed recognition. This Samsung solid-state battery silver situation looks eerily similar. The same industrial driver is creating inelastic demand. Same analyst blind spot, assuming substitution will magically appear in time. Same underestimation of how long it takes to bring a new supply online. It rarely does. And this time, the scale is bigger. Cars aren't a niche market. Neither is energy storage. When both industries need the same metal at the same time, the silver price doesn't drift higher. It gaps. So what do you do with this information? The Samsung bomb has already detonated inside R&D labs. The shockwave just hasn't reached the price chart yet. When the first mass market car launches with these specs, panic buying won't come from Reddit. It'll come from Ford, GM, and BMW scrambling for supply, and they won't be buying at $61.50. The banks are staring at weekly charts. You need to be looking at the periodic table. Drop your thoughts below. Would you buy silver at these prices knowing this? Subscribe if you want updates when the shortage really hits. They want you to believe silver is speculative. The truth? It's about to become the most strategic metal on Earth.